All right. Good morning. I hate this pattern that's happening in the markets right now. I mean, there's stocks that are doing their own thing, but it's what I call a real grinder, where there was this consolidation right over here, a couple of weeks ago, and this correction bar, which is a great continuation pattern. When you get a sharp move like that, takes out the high, red bar, and a 180 reversal, and to add to that, a bottoming tail bar that took out the low. And that's supposed to explode from there. If you remember a couple of weeks ago, we talked about a measured move, and maybe this eventually gets there. But one of the things I mentioned, I don't know, I mentioned to Dan, or I mentioned in the room where we're mentioning, the market pushed up, the Nasdaq especially made a new high. So the way it's moving up was like as if it was pulling a tank on its back, kind of dragging things along. And that's what's happening here. As it started to move up and picked up the momentum here, back down, took out the low of the day, comes back up again. A go nowhere day, tails on the top, tails on the bottom. Another day tries to dip down, comes back up again, closes below the open. And it was yesterday, but still an inside day with relatively narrow range. And here we are today with a little bit of corrective price action going on. So I guess as we do every day, we'll just see. And as prices are coming down here near this prior support, as you could see right here, we'll see if they hold and push it back up again. And you can see the little breakout failure that happened there. Was it tried to move up overnight? It came down, a little retracement. Anyway, there's just a lot of backing and filling, plodding along, grinding to make little minuscule advances day by day. And like I said, I hate the pattern because, look, we want some volatility. We want things to come down like that and rip back up again, and things to move as intraday traders. If you're long and holding on, it's kind of like, oh, like if you're looking at a stock, oh, I didn't make nothing that day. Oh, I lost a little, no big deal. Oh, look at, wow, it's going again, and so on and so forth. Anyway, it is what it is. We can't change it, but it's just been kind of you've got over a week here of kind of running in place with just slight headway to the upside there. So looking at the NQs, well, a little bit more like what we like, but a lot of consolidation. And one of the things I said yesterday was that, based on that sideways movement like that, if it can get above the highs, and, we were looking at this consolidation, and I was like, by no means should it come back in again. And it didn't. And it was strong. It jiggled around a little bit, early on, and then it picked up steam and went higher. So, the Nasdaq's been leading, with the internet stocks, and semis came back where they really looked like they were in trouble. The semiconductors, some time ago, they took a hit when the market came down, and they came down real hard. They were like, I think the worst performing sector that week was down, I think it was over 7% or so, 7-8%. And, gapping up, working their way back up again. So kind of crazy price action, gap up, a big gap down and a big gap up, anyway, it's, why I've kind of coined this market over the last couple of years, a year and a half, Mr. Schizophrenic. At one point, it's like, depression is coming, and then all of a sudden it's, the roaring 20s again, back up. But and we haven't looked at, I don't know if I have it up here, we haven't looked at the internals in a while, but these wrong way option traders, I guess if they bought in the money or deep in the money, I guess they have to be making money. But if they didn't, those options just must be deteriorating so slow, but they just keep buying the calls, and it's in that nosebleed territory again. and the breadth just continues to lag, and it's never been a good sign. And when I looked at this yesterday, Dan asked me at the end of the day where it was, and I mentioned it was in the green room. And I looked at this, and I thought, and I had been thinking that breadth would play catch up as these markets and stocks came back, and it hasn't happened. So there's still a lot of stuff that's lagging out there. So initially, my thought was, okay, these stocks, other sectors are going to play catch up, and breadth is going to push up into this area, and we're going to get, um, high risk for longs. And it hasn't happened. The breadth has just been, and you can see here, almost non-existent. So, and what I was going to say was I began to wonder, looking at this, are we going to get the acceleration and breadth catching up, or does this take on the look of a head and shoulders top? And, we probably would take a break of that swing low right there, since this now on the spiders, that gap up caused the breakout right there. So now it's vulnerable to a breakout failure if that should happen. So a break under that prior day's low could open up the door to this. The wrong way option traders are up to their eyeballs with call options, expecting this market to blast off. And maybe this could, we have different scenarios. So ultimately, we don't trade these things, but they give us guidance as to what's going on under the hood. And it's prices that we change. And so right now, this line in the sand right there is an important one. And it's important because prices were going sideways, right? So you've got, the start of the move up here, but all these bars, are about within the same closes, give or take. So, and a gap up, it really should not have ended with a topping tail, selling into the move. It should have ended with a range expansion, and it didn't. So that's an important line right there for this S&Ps not to violate. So keep an eye on that. Let's minimize this. Look at a few other things. The Dow has been lagging, basically left out in the cold to the new highs, other than this poke here and pullback, and just really nothing going on. It just was able to hang on an inside bar yesterday. Now it's down a little bit, still early again at its support. So we'll see what that does. The Russell was acting relatively well, but overall daily, it's just chopping sideways here. And this morning, that's a relatively deep retracement back down toward yesterday's low. Still just bar by bar, up, down, bottoming tail, topping tail, bottoming tail, inside bar, red, green. It's just a choppy consolidation, another kind of grinder, grinder sideways versus a little grinder side to upward slope. It's just patterns that say, just leave it alone, go look somewhere else, see what's moving. Eventually it'll resolve itself. Yeah, the yen was getting shellacked. So I only have the futures. I don't have the forex, but you could see, the big drop, and where it attempted the bounce, it didn't get very far and dropped again. But this is something that we covered in the coaching on Tuesday, if you recall, right, about how to read momentum without indicators. Right. So this is tremendous momentum, right? Fast, but range begins to expand. And there's this reversal, and it makes no headway. Now that creates a reference point of support that wasn't there. And so when buyers stepped up there, and it was just like nothing going on, next leg down. But now look at the distance between the lows. So momentum is beginning to slow here, and you can see this little line over here. Look to the left. There's a little bit of support right there. So while it hasn't begun to try and lift off here, it's stabilizing, and we have this momentum slowing. So ideally, whatever the time frame is you're looking at, but looking at this 15, if this could go sideways for a couple of hours, creating a base down here, we could get at least some type of a bounce. But this is a pretty nasty drop, breaking down through this support here. And it is on the next level, looking over there at the weeklies. But, that is some momentum and power to the downside there, which in of itself suggests if it can't make a miracle, bounce, it's going to go lower. All right, so let's go back to our equities. By the way, looking at this currency futures like that, part of the takeaway is you see me do the exact same analysis, interpretation based on the method that we use. It doesn't matter if it's a currency pair, futures contract, soybeans, Apple computer, it's all the same stuff. Supply, demand, support, resistance, trends. All right, crude oil continues to grind, making a new lift here, moving up. But the euro's starting to stabilize, which means the dollars is starting to stall up there. It pushed a little higher, but ultimately reached this area. And we were talking yesterday that, these energy stocks are starting to show a little bit of relative strength. Nothing to get all that excited about, but, retest, bottoming tail bar. So B, positive little breakdown failure. So I started talking about this a couple of weeks ago. To keep an eye on it. Seems to starting to take hold here with that intermarket scenario. Bonds are up, right? No big deal, within this trading range there. As the markets are down a little bit, that inverse relationship has been what's been playing out. Gold is having another good day, taking out that resistance. Right? We've been talking about this forever with the bullish pattern of the multi-year breakout over here and that consolidation. And we talked about red bars being ignored, right? Or that was what should happen. I guess it was back here or here, whatever. It's been playing out perfectly as it should based on the longer time frame. Silver's bringing up the rear. Now it's into this mess over here, beginning to stall. And the transports just continue to be a sloppy, grinding, terrible pattern of running in place, going nowhere. So another one to stay away from until this resolves itself one way or the other. Breakout that failed, certainly looked like it was going higher, failed, held support. It's just in the middle of 2 reference points, right? So going absolutely nowhere there. I think that's about it, Dan, for me. We'll have to cover. And, financials. These are really kind of weird what they're doing, right? Where they broke down here, came all the way back up again. And then, like some of them, this looks like it's 1, 2, 3 to the downside. It's going lower, but, Goldman Sachs looked like it could sloppy pattern, but maybe could go up. This market is just filled with uncertainty, some confusion, but ultimately, as far as the broader markets go and technology, it's like, who cares? Just buy the dips and slow grinds higher. So, got to pick the right stuff as always. Sometimes it's easy where you can just throw the dart, but not in this market. Yeah, I saw that, Miami. Pretty interesting. Morgan buying E-Trade, some consolidation within the industry there. Been going on forever, but that's a big one. Yeah. All yours, Dan.
All righty. Yeah, Morgan gapping down here on the purchase. That's a bearish gap, of course. we'll check other brokers today. And, you know, I was just, as soon as I heard that news, my immediate thought, and this is why we say we're actually trading other traders. And what we mean by that is, I don't care about the fundamental move, but they are brainwashed to do certain things. So if there's a buyout of E-Trade, oh, I better go rush and buy the competitors. So here's Interactive Broker, up $1.75, extended. You know, the monthly looks good, but this thing is run from 47. Has their fundamentals changed to make this gap up $1.75 with the market gapping down? It's just, you know, that's why we trade people. We trade the, you know, patterns, of course, but, you know, we're always thinking, what are the sheep going to do? Well, here's another example, space. What are the sheep going to do? They're going to keep buying this. And that's how climactics occur. Space, Tilray, Bitcoin, they just keep chasing. But it'll end like everything. But yeah, let's check other brokers to see if there's any setups for us to trade, either with or against the gap. All our opens are fine. I see our little, we have a Facebook put spread for tomorrow, but it's far away and it's down 50 cents, and that's nothing. That's nothing on a $220 stock. We got our stop in place to lock in a gain. We nailed our exits on Tesla, Netflix yesterday at the high, and also Beyond. We got out of a put spread right at the high. Yeah, no, we're in Boeing put spread. So let's see, it closed at spot 30, up 50 cents. There is some volatility pre-market, but the fact that it had this bullish 15-minute bar, with the market gap down, is telling me there was some inclination of positive news. And we just need that melting ice cube, Barrett. We need them, or Miami. We need the melting ice cube to tomorrow expiration. Let's just stay above 335 short strike. Plug, we sold a third yesterday into strength for a 38% gain, gapping up again. This was a core trade though, and it's just, that's the dilemma. Do you want to take short-term profits because we're up huge, or it's a core trade and my target's 15 bucks, so you just gotta sit through it. And those are just different ways of managing open gains. And that's, again, back to your trading plan. Yeah, solar, yes, solar has been on fire. Look at TAN gapping up again. Yep. Yep, what a beautiful entry here. And remember, we had the MT live on MAs. What a beautiful, beautiful alignment of the 20 and 50 coming into alignment with the 200. So this is a beautiful buy setup on a bigger time frame on the weekly. Beautiful example right there. Wow. Well, I'll have to email that to myself. Yeah. TAN MAs. All right, let's go to gappers now. We got a ton of them. LB gapping down, I think because they're selling part of their brand, Victoria's Secret, I think, whatever, selling a 55% stake. This is actually a Bear Island reversal. Gapping down under this is leaving this entire 3-week consolidation as an island. TU 39 bucks, bearish gap down here, but not a great price void. We'll come back to it. Oh, you all mentioned DK, not DKS, DPZ pizza. And it's in my list here somewhere, but I got a ton of them to go through. 358. All right. Massive gap to new high after an extended run. So what do you think my bias will be on DPZ this morning? Buy, sell, or hold, or do nothing? Yeah, so we just need a setup. Pre-market, it's actually still strong. So I'm not shorting the open. Yes, Clint, I'll be looking to sell an out of the money call spread. You got it. Absolutely. But that's my bias. So we just have to now wait for the setup and go through our checklist, make sure the options are liquid, good juice, and then we'll enter the trade. Little India. I think this was that satellite, wasn't this? Yeah, I think they were on the verge of bankruptcy because I think the government wasn't paying them for their satellites. Now it's gapping up. That could give us a little trade. We'll come back to it. XEC gapping up under 44. That's a big gap. Will come back. McGraw, I looked at that big list you sent, and I like pins. Let me write it in my other computer. Pins and ping. So this is a deep retracement, but this is a potent reversal at the gap fill in the rising 20, and it's showing relative strength on pre-market, right? The market's down, wide range bar, taken out yesterday's high. So this looks great. Let me put it there, pins. A ping, wide range breakout from consolidation. Looks like it's opening flat. That looks great. Zulu gapping too big. There's the interactive broker we talked about. I put VIX here, VXX. So if the market does sell off, we got a big old retest pattern here. A big retest. Let's keep an eye on that, maybe for some put spreads or even a short-term directional. Whenever I buy volatility ETFs, it is a short-term trade, and I do it in parallel with my bearish bias in the spiders. Would pins be a good one for STO? What's STO mean? STO put spread? I don't know what STO means, but yeah, the pattern, absolutely. See if you can get a put spread under yesterday's low. Sell to open. Oh, well, you don't even need to tell me STO. That's like, just ask me, is it good for a put spread? And I'm saying the pattern is yes. So now just go through the checklist. What's the checklist? I say it all the time. Make sure they're liquid, and gives me the premium for days to expiration, and then we'll decide and see how it's behaving in the first 5-10 minutes. Yeah, I got another email from a new subscriber saying, hey, Dan, and you're a swing trader, how come you don't give more directional options? And I say, I would love to. I would love to, but there's not that many liquid options, unfortunately, particularly the way we trade and go in the money. Unless it's very liquid, you know, the usual suspects, Apple, Facebook, spiders, Qs, Intel, Microsoft. Those are all very nicely liquid. There's so many that aren't, and I'm not going to give up 30, 40, 50 cents spread. It's crazy. Let's see, a very bearish gap here, VIAC. It's Viacom. Oh, I also read in the journal today. So isn't this interesting? Dish was up yesterday. Well, gapped up, closed flat. But today's Wall Street Journal said, which means it's yesterday's news, that's my point, that they lost 366,000 subscribers. I don't know if it was last quarter or year or whatever. I didn't read the article. But that's just another example of why we're chart readers. You know, I don't care about the news. I care what the reaction is to it. Stamp one. Wow, this thing's volatile. The monthly still has room, but for a short-term trade, this is similar to our DPZ. A big gap up after a multi-bar move. I'm going to put that here. So that's another bear call credit spread candidate. So I'm saying candidate because we got to see what happens at the market open. But you know, I'm going after my tier 1 setups right now, and those are both tier 1s, meaning they warrant going in a 5-minute thumbnail. Actually, yeah, I'll change this to 5. Snips 160, so it's a bearish gap. But it, you know, pull back from all-time high. Someone on YouTube's asking about SAM. Yeah, that's on my list right up here. SAM 405, gapping right here. So this is a big fluid move. So if I look at a bigger time frame, it's going to be in the middle of nowhere. See that? So it's a bearish gap under this. 1, 2, 3, 4, 5 days. That's a bearish gap. There's some support from this day, but if the like 30-minute low, you can short for a gap fill. 30-minute high, not crazy about that because of all this overhead resistance. So it's just not a quality setup. Then, you know, we'll come back to it. 5N, $79, doing nothing. NDSN, gapping down, 169 and change. We'll come back to it. CAR, here's another one, big old gap. Big old gap after multi-bar move. There is another candidate for a call spread. CAR is the rental car. I can't believe how these things rebounded. I remember these things getting killed in the Uber days. And now with the gap up, it's double. It's doubled off of last year's low. ALB, $88, no great pattern. Oh, remember I did a put spread yesterday, not knowing that it was earnings. I sold a $95 put. So I held it because I just took the risk. The odds of this staying above 95 by tomorrow just looked overwhelmingly positive, and it has a nice gap up here. Now this one's not a great one for me to sell a bear call credit spread because this is a gap breakout igniting. So sure, it's a big gap and you might get a day trade short. But I like the fluid multiple bars better, like stamp. All right, look, there's already selling kicking in. But the problem is with options and stocks that do earnings for that reason also, the spreads are going to be asinine at the open here, asinine. So they aren't even open. The 140s, well, they are open now. The 140s for tomorrow, 50 cents by $1. But the 135s are crazy spready, 150 by 490. So, you know, unless you just wanted to pop the 140s naked, maybe try to get 70 cents, a little price improvement, but I'm not saying to do that. I'm just telling you the problem at the open. All right, DPZ is still running. No, I know, Barrett, that's the purpose of my lesson. What the heck is up with the pizza man? Pins here is going. See in the 5-minute chart right here, pins looks great. Let's do a 5-minute high. It's 931. I mean, if you're aggressive, you can buy, start scaling into it. The chart looks great. And you asked about a put spread, and I said yes. Let me look. So just eyeballing it here. 23s or 22.50. 23s for tomorrow. Only a nickel. All right, plug is, I've tightened the stop, but it's getting